Sanford is a town of 29,000 people in central North Carolina. Located in Lee County, it is unique for its small size and rural surroundings, coupled with its close proximity to major cities in the state.
My name is Chris Tacey, and I'm a realtor. Lee County, we're in the middle of say a big triangle. We're in the middle of the triangle to our north, Moore County and Southern Pines area to our south, and also Fayetteville. So we're right in the middle of that triangle. So our market hasn't been affected nearly as bad as it could have been. But with that being said, we're still seeing more foreclosures.
In spite of its ideal location and relaxed atmosphere, Sanford has not been immune to the national housing crisis. As in many areas of the United States, the town experienced a spike in foreclosures when the housing bubble burst.
I'd say in the last 2 years, foreclosed properties have increased in the Sanford and Lee County market. And I actually expect that to happen for the next 4 or 5 years to stay on a regular basis. Most of what we're seeing are government loans, whether FHA or Fannie Mae, Freddie Mac backed loans, are now being foreclosed on.
These problems were brought to a head by lending institutions granting home loans to applicants regardless of their financial status.
Fannie Mae and Freddie Mac were the entity that backed a home loan, so it wasn't their guidelines necessarily. They gave a loan back in 2005 and 2006. The guidelines were so laxed at that time that we make a joke, if you could fog a mirror with your breath, you could buy a house. And at that time it was true, unfortunately. So now we're seeing the repercussions of that. And because Fannie Mae, Freddie Mac, Ginnie Mae, these companies, these government entities backed those loans, they actually get the bad rep for that. But it wasn't necessarily their fault. The difference now, the guidelines now versus 5 years ago, someone with A1 credit, you used to could come in, do the paperwork, be approved for a loan within a couple days. You wouldn't have to jump through all the hoops. Now they're crossing every T, dotting every I. You may need 2 years tax returns. Not only that, you may have to have additional documentations to support everything on your taxes. Where at one time you could come in and do a stated income. You tell them what you make, they believe you, and then you buy a house. That doesn't happen now. You have to prove everything. The fact that they were backing these loans gave us guidelines, or gave the lenders guidelines, and the lenders used the guidelines to the best of their benefit to put more people in houses, which honestly I think the goal of lenders have changed a little bit. At one time it was try to get everyone a loan or into a house that wanted one. Now they've almost taken a funnel, and where it was open for everyone to get into the pipeline, now they have squeezed that down to where it's so hard for someone to get a loan. People are jumping through hoops that they've never had to jump through before. So they've gone from one extreme to the total opposite, in my opinion. Well, when a home's foreclosed on, that process can take sometimes 2 years from the time someone starts missing a payment to the time we actually list it for sale. It's a long process. I have found that folks tried their best to keep a house, which there are programs designed for that, which we're trained to do to help people keep their home if that's what they choose.
During the lengthy process of foreclosure, it is possible for a responsible homeowner to salvage their credit with the help of a CDPE.
My name is Cindy Ammons, and I'm a broker owner at Century 21 Southern Realty. A CDPE is a Certified Distressed Property Expert. I obtained my CDPE about 3 months ago, and what a CDPE does, it helps in facilitating a sale or purchase on a property that is underwater. When a property is underwater, it's when you owe more than the property is actually worth.
It's designed to help realtors help people, whether it's a homeowner that's selling their house or a homeowner that may want to keep their home. It's designed to give you the background experience to know how to effectively help someone in that situation. There are a lot of folks, even here in Lee County, that are distressed and may not even know that's what they are. You can be behind one payment and think, oh, well, I'll catch up next month or I'll catch up the following month. If you have children, something's going to happen. You may have to go to a doctor. You may get into a car accident. That 1 month now becomes 3 months. In 3 months now you're defaulted greatly on your home loan, and next thing you know you're getting those pink notices in the mail. So it can spiral downhill pretty fast.
An April 2012 Reuters poll of economists forecasts that the nationwide decline in home prices is nearing an end. This could make 2012 an ideal year to purchase a home.
Well, in my experience, I find that our current market, especially for foreclosed properties or, matter of fact, real estate in general, is stabilizing some. I cannot say it's rebounding yet, but we're not continuing the downward spiral that we have for the last 4 or 5 years.
When I started in real estate in about 2005, end of 2005, beginning of 2006, it was great. Because you would always hear, when you first get into real estate, don't expect to sell any homes the first year that you are in real estate. But that was probably one of my better years because the market was okay. And until about 2007, going into 2008 is when things started to fall off. So it has gone from the pretty, high down to the low, and it's starting to, I think, level off. The end of last year, 2011, it started to pick back up again, and I've noticed a good increase as of the first quarter of this year.
If someone does want to purchase, it's probably the best time for them to do so. With the prices the way they are, someone can get an excellent deal on a property, whether it's foreclosed or not. Traditional home sales are affected because of the short sales and also the foreclosures. So a home that, say 10 years ago was worth $100,000, today's probably worth $100,000, which if you were to take into inflation, that normally wouldn't be the case.
My general feeling for the Sanford, Central North Carolina market is that I feel like things have leveled off and we're beginning to, make that climb back up to where things are starting to sell. But we're fortunate that we're in an area that we have a lot of great industry. We have the military, that creates a lot of turnover and folks buying homes. The interest rates are great. I remember when I started, like I said, about 7 years ago, they were in the 6 to mid 6s. And the interest rate is huge when it comes into factoring in how much you're going to have to pay on your mortgage a month. Banks are lending money. One thing I think that's a big misconception about purchasing a home is it's not as hard as a lot of people think that it is. The banks, we have a lot of great banks, whether they be local or the large national companies, offering mortgages, that it's not as strict, as most people think that it is. So it's a lot easier to purchase a home than most folks think it is. They just need to call someone, that's going to go to work for them and see about, what they do need to do. And you can afford so much more house because the interest rate is low compared to what you would pay for in rent today, even at an apartment.
The median sales price for homes in Sanford from January to March of 2012 was $111,900 based on 48 home sales. Compared to the same period 1 year ago, the median home sales price decreased 46.7%, or $98,100, and the number of home sales did not increase at all.
When you're working for a homeowner that's buying their first home, they're able to afford a house much larger than they could have purchased originally for a price they can afford. So we're finding people are buying a $150,000 home out of a $120,000 price, so they're getting a much larger home for a better deal.
There are currently 1,300 resale and new homes on sale in Sanford, as well as 42 homes in the pre-foreclosure, auction, or bank-owned stages of the foreclosure process. With a slow but steady economic upturn and desirable homes on the market, Sanford is poised for a strong rebound from the housing crisis.